Welcome back, and joining us on the show now is Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And what a big move that we've seen in crude oil prices overnight. 3% down overnight, 6% down now for the week. And yes, there are various reasons, starting right from the ceasefire conversation to the very weak Chinese data. What is your sense on how much weaker can crude go?
Well, good afternoon, Manisha. It was a great market to short, and I'll tell you what, considering also that the US dollar's been hit very hard. So I think there's a few dollars to go yet. It's got to find a floor, but seems to be just it's falling. And, you know, that sluggishness as far as Chinese growth and year on year, it's down about 4% from an import perspective over that first 7-month window. So I think there's a few bucks to go yet. And yeah, let's just see how it rolls. But it's a time to be short, I'd say, for the short term.
Peter, would you say that the fundamentals are so weak that even as the dollar index is trading at a 7-month lows below 102, hasn't been able to support much?
Exactly right. I mean, you know, that US dollar index has really come under big slide yesterday. It went from about 102.50 and then all of a sudden it was down under 102. So considering crude's had such a big sell-off, coupled with the US dollar index coming under pressure, that really demonstrates the fragility and softness across the whole complex. So where we sit from here, if I want to see what happens as far as Fed Chair Powell, and then of course I think crude's got maybe it's going to hit a 70. I mean, you got the market at just under 74 for WTI. I think a couple extra dollars stripped out of it early this week could, or by Thursday, is a real chance.
Peter, what's your sense on where the dollar index can take support from here? And when it comes to Brent now, where do you see, or what range are you anticipating for the, let's say, next 1 month or so?
Well, Manisha, I'm hanging on every word, comma, full stop, you name it, that Fed Chair Powell delivers at Jackson Hole, because if it's going to be a 50 basis point cut, that's going to really whack the US dollar. I think it'd really make it the best chance you could get even in the hundreds. I know it's high 101 at the moment, it's 101.90, but I think it's got real big softness if 50 basis points are stripped out of it. And the other side is, I think there's just a general sentiment, you know, is the US going, it seems to be away from that recessionary fears as the stock market's at nearly a record high. So it's a very volatile market at the moment.
It absolutely is. But some bit of a support is what we are looking at in case of metals as a sector. Would you recommend a buy there?
Well, you saw copper up. I mean, that had a nice rally to the upside, and it's still, you know, that 92.500. So it's, you know, shopping around. It was at 88, and then all of a sudden now it's at 92.5. Some of those other metals have had a nice little rally as well. So overall, I think could be a little bit further upside, but it's choppy. It's hard to get a real, you know, you've got to be a short-term trader. You don't marry a trade like this, Manisha. You just look for opportunity and then have a chance at profiting from it.
So, I mean, as you said, there is the FOMC meeting minutes that are due on Wednesday. Jackson Hole meeting comes in on the weekend. And between that, there's a lot of economic data still coming in from various other countries. How would you want to trade the current week in light of all of that?
Well, I think US equities possibly up. I think further softness as far as the crude complex. Keep a very close eye on gold. I mean, you're nearly at an all-time high. And then you've got to be conscious as far as where US dollar travels over the next couple of days. It's been choppy. You know, there's plenty of opportunity. The euro's at nearly at 111, so 1.11. So I think there's possibly a little bit further uplift there as well. You've got PMIs coming out for UK and Eurozone, and you've got those CPI numbers coming Thursday or Friday for Japan, Manisha.
Peter, one more question, and this one is on Indian markets itself. While, of course, we're looking at metal prices, there are reports that the metal companies would go ahead, cut some prices here, because we haven't seen that happen yet. But the other thing also is about crude, where we have seen the Indian self-sufficiency in case of crude continue to decline. I mean, until last year, we were 85 to 86% dependent on imports. The latest number for this year shows that it's almost at 89%, with various reports suggesting that we will sustain above 90 in a year or so. How do you look at India with US elections in November, the crude oil prices where they are, and the geopolitical tensions?
Manisha, I'll start with geopolitics first. That's the unknown. That's the wild card, and no one knows what's going to happen as far as the positioning with Russia and, of course, Ukraine. What happens with Israel versus Iran, and then those counterparties that'll join the whole argument. be the likes of Russia and, of course, China, although I think they'd fall in under Iran. So this is creating a lot of uncertainty to, I think, geopolitics globally. And I feel as though that could happen before the election. So we're only about 2.5 months out. I'm expecting a real hot October. And then you're looking at the other side, as far as what you mentioned, as far as crude. If there was something to really bounce it, that'd be the wild card. That'd be the big kahuna, which is geopolitics had just rocketed higher.